Stock chart patterns are essential for understanding market trends and making informed decisions. These patterns are recognizable configurations of price movements that signal transitions between rising and falling trends. Trend lines are crucial for spotting support and resistance areas on a price chart. They help identify uptrends, downtrends, and consolidation periods. Understanding how to draw trend lines and interpret them is key for technical analysis. Continuation patterns, such as pennants, flags, and wedges, indicate a temporary interruption of an existing trend. On the other hand, reversal patterns like head and shoulders, double tops, and double bottoms signal a change in the prevailing trend. Each pattern has specific characteristics and implications for market direction. With over 75 patterns used by traders, mastering the art of recognizing and interpreting stock chart patterns is a valuable skill for anyone involved in the financial markets. Thank you.